Hey everyone, welcome back to the channel. Great to have you here. If a full-scale war between the United States and Iran were to happen, the impact on the US economy could be immediate, powerful, and deeply felt by American households, businesses, and investors. The first and most visible effect would likely be a sharp spike in oil prices. Iran sits near the Strait of Hormuz, one of the most critical oil shipping routes in the world. Nearly 20% of global oil supply passes through this narrow waterway. Any disruption there could send crude oil prices soaring above $100 or even $150 per barrel. For Americans, that would translate directly into higher gasoline prices at the pump, increased transportation costs, and rising prices for everyday goods. Higher oil prices would also fuel inflation across the United States. Energy costs affect nearly every sector of the economy, from food production and airline travel to manufacturing and shipping. If inflation rises again due to war-driven energy shocks, the Federal Reserve may be forced to delay interest rate cuts or even raise rates further. Higher interest rates mean more expensive mortgages, auto loans, and credit card debt for American consumers. This would slow down spending, which is the backbone of the U.S. economy since consumer spending accounts for roughly 70% of GDP. The U.S. stock market would likely experience immediate volatility. Historically, markets react sharply to geopolitical uncertainty. Investors tend to move money out of risky assets like stocks and into safe haven investments such as gold, U.S. Treasury bonds, and the U.S. dollar. While defense stocks may surge due to increased military spending, sectors like airlines, travel, retail, and technology could see significant short-term declines. Retirement accounts such as 401ks and IRAs could experience temporary losses, creating anxiety among American families planning for the future. Government spending would also rise substantially. A war with Iran would require significant military resources, logistics, and long-term operational costs. Increased defense spending can stimulate certain industries, particularly aerospace and defense contractors, but it also expands the federal deficit. The United States already carries a national debt exceeding $30 trillion. Additional war spending could widen budget deficits, potentially increasing borrowing costs over time and putting pressure on future taxpayers. Another major concern would be global trade disruptions. The Middle East plays a key role in global energy and shipping networks. Any instability could increase shipping insurance costs, delay supply chains, and push up prices on imported goods. American businesses that rely on international supply chains, especially in manufacturing and electronics, could face cost pressures similar to what happened during the COVID-19 pandemic. This would further strain small businesses and consumers. However, it's important to note that the U.S. economy today is more energy independent than it was decades ago. Thanks to domestic shale oil production, the United States is one of the world's largest oil producers. This energy independence could soften the blow compared to past Middle East conflicts. Still, oil is priced globally, meaning American consumers are not immune to international price shocks. The psychological impact of war should not be underestimated. Consumer confidence and business investment often decline during periods of geopolitical uncertainty. When Americans feel uncertain about the future, they tend to save more and spend less. Businesses delay hiring and expansion plans. This slowdown in economic activity could reduce GDP growth and potentially increase unemployment if the conflict becomes prolonged. In the short term, a U.S.-Iran war would likely cause market turbulence, higher energy prices, and renewed inflation pressures. In the long term, the economic outcome would depend on the duration of the conflict, the stability of global oil markets, and policy responses from Washington and the Federal Reserve. For American households, the biggest impacts would likely be felt at gas stations, grocery stores, and in investment accounts. While the U.S. economy is resilient, a major geopolitical conflict in the Middle East would undoubtedly create significant financial ripple effects across the nation. Thanks so much for watching. If you enjoyed this video, don't forget to like, share, and subscribe.